A very warm welcome to all of you guys. Yes, I welcome you all on YTG's free training, and this is a recorded training for the people who cannot join us live, so that they can watch the training as per their comfortability and can take benefit out of the trading. So guys, stay connected till the end of the training, and I promise you that once the training finishes, you will have a lot of concepts clear to you, and those concepts will take your trading to the next level. Yeah, so let's begin the training. Yeah, now what are the three things which are needed for a living, guys? Yes, these are the three basic needs for a living. Number one, health. Number two, wealth. And the third one is happiness. These are the three basic needs of a living. Now you should be very clear into your mind that trading is for the wealth creation. Now why this is important? Because when you understand this is for the wealth creation, you will understand that trading is not gambling, it is not speculation. ठीक है, हम छोटे समय के लिए ट्रेड नहीं कर रहे हैं. ट्रेडिंग इज फॉर लिविंग. आज से 5 years down the line you will be trading. Today also you are trading, tomorrow also you will be trading. So when you are trading every day, you should have a proper planning. Trading, what is trading, I'll explain in later slides, but you need to be very clear into the mind that we are trading for the wealth creation. Now it is not something related to the health. क्या होता है? If trading is going good, people are healthy, they are happy. If not, then they are feeling sick, they are unhappy. So it is not something which is related to your health and happiness. It is related to the wealth creation, and that is only the way it should be treated. Yes, so I hope this is clear to all of you guys. Now let's move on to the next slide. Why trading? Now wherever you are, guys, ask yourself one question: why I am into trading? There are a lot of business in the world, yeah, and out of all, why you have chosen trading? Yes, this is a good question. Now why trading? Because trading has some benefits which other businesses don't have. Yeah, why? Because in trading, number one, you are your own boss. You don't have to report your manager or report your boss. In trading, you are your own boss. Your skills are making money, and in the lack of those skills, you are losing money. You are your greatest friend and you are your greatest enemy. So whatever you are doing and however you are doing, you are responsible for that. So that is why it is called that you are your own boss when you are trading. Now second point is secondary source of income. Some people have money earned from some sources, and now they want their money to work for them. Firstly they worked for money, now they want their money to work for them. So there is another way is that is called investing, or some people want a regular income from their money, so that is also a way of investing, or for generating some passive income from the market. And there is a financial freedom. This is a business which can give you financial freedom. So these are the big benefits of the trading. There are a lot of benefits of this business, and I can guarantee you this is one of the best business of the world if you know how to do it. The condition is you should know how to do it, and how to do it will be clear to you till the end of the training. Yes guys, should I move further? Now moving on to the next slide, what are the statistics? Now if you are planning to come to the trading business, guys, let me show you the statistics. and the statistics are that 95% of all traders fail, only 5% win into this market. You might be surprising looking at the statistics, but yes, this is the reality, that only 95% out of 195% people or traders do fail, only 5% do win. And what is the reason? Some of you are beginners, some of you are experienced who are watching this video, since it is a recorded, but you can ask yourself that what is the reason why so much people fail here and only 5% people are winning. Yes, there are a lot of things which make 5% successful and 95% failing. Now it's up to you where you want to be. Either you want to be into the 5% or you want to be in 95%. Yes, so let's move on, guys. This is a rumor which you might have heard, that trading is difficult. You might have heard a lot of people saying that trading is a difficult thing, don't go into trading, it is like gambling, this and that. But what is the reality? And let me tell you the reality, guys. Yes, trading is difficult if you don't have a right guide. If you have a right guide, it is easy. And I would like to congratulate all of you that you are at the right place. Here you will get your right trading guide, your trading guide. Yes, guys, so I would like to congratulate all of you that you are at a right place. Yes, guys, let's move on. Now we will discuss the 10 elements of successful trading. Yeah, why elements are discussed first? Because to how the things are made up, they are made up of the particles, the small elements, atoms. Yeah, so what are the things trading is made up of? So guys, here are the 10 elements of successful trading. We'll go to all of them one by one, and you need to understand this very deeply, and all of the traders or students who are sincere and who really want to become successful will note it down. I want all of you to make notes on the other side so that you can revise it over a course of time. Now here you go. Now the first thing is right mindset. Yeah, now tell me, guys, what is the mindset when you come at the market at 9 o'clock or 8:30 before the market opens? You know, in every arena of the life, mindset matters a lot. Mindset is, in some different language, it is also called attitude. And mindset means the thoughts, and they cause your attitude, and then with that attitude you perform an action. So a mindset is very key thing. Yeah, so what is your mindset towards trading, towards this business? Are you treating it as a gambling or speculation? See, trading is a business, but how you are treating it is revealing your mindset. So why we have kept the mindset first? Because the mindset is the thing which is most important in the trading. You should have the right mindset, or you should have a peak performance mindset. Got it, guys? Now, is this clear to everyone? What is right mindset? Now the second is right opportunity. Now why I have written here a right opportunity? Because what happens, some people are very eager to enter as soon as market opens. Some people want to have it at 9:15 only. 9:15 से 9:30 के बीच में तो मुझे ट्रेड लेना ही है. No, this is not the way trading is done. You need to wait for the right opportunity. You may get an entry at 10:30 or 11:30 or probably 1:30. Opportunity will not occur when you want it to occur, because market is made up of big players as well. So your intentions or your approach doesn't matter. Whenever there is a right opportunity as per your trading method, you go for it, but don't just jump anytime anywhere. Wait for the right opportunity. Now third point is a winning method for entry. Winning method for entry. Yes guys, now some people enter because they have heard on some TV channel. Some people enter because they have seen some post on the Facebook, on the Twitter, on the Telegram, or etc., or some good friend of them has suggested him or her. Now this is not the way trading is done, guys. This is a big eye opener that you should have a proper method for the entry. And ऐसा भी नहीं today you are using this method and tomorrow you are using another method. You should have some specific method which have a good strike rate, and you keep on working on that method for at least 1 year or 6 months. Then you will get to know that yes, it is working for you or not. Yes, so you should have a proper entry method, and that method should be tried and tested, which is called as a winning method. Now risk and reward. Risk and reward tells you how much you are betting for how much you want to get. Ideally you would have heard about a 1:2, a 1:2, or you could have a 1:3. Yes, so this is called as the risk reward ratio, wherein you are betting 1 rupee for the target of 2 rupees, or you are betting 1 rupee for 3 rupees, you are betting 1 rupee for 4 rupees, 5 rupees, so on and so forth. So it matters that how. Now take a condition that you are betting 1 rupees for 50 paisa. Is it worth betting, guys? All of you guys, is it worth betting? No. At least if you are betting on anywhere, it should be 1:2. At least. Maximum it could be 1:20. That doesn't matter, but at least it should be 1:2. Now the next and last comes position sizing. Now what is position sizing? Position sizing is how much to bet. That this was in the money terms, and this is in the quantity terms. Position sizing is also known as quantity. Yes, how much quantity you should buy or sell to be profitable every day. It is not a one-day story. Yes guys, so यू शुड ऐसा नहीं कि आज हमने 1000 क्वांटिटी से ट्रेड किया, कल 2000 और परसों सीधा 5000 क्वांटिटी से हम ट्रेड कर रहे हैं. यू शुड हैव अ प्रॉपर मेथड ऑफ पोजीशन साइजिंग. your plans should be very clear, guys. This much I'll trade, here I will trade, this will be the risk and reward. It is like any other business. You have everything in your mind. Yes, let's move on. Stops and trailing stops. Everybody must have heard the word stop loss. Yes, now tell me guys, stop losses are not new to you, I know, but how many of you actually put the stop loss into the system? Because this is a recorded session, I cannot have the live answers, but yes, I know that only 5 to 10% people actually put the stop loss into the system. And what should be the ideal case? The ideal case is that as soon as you take a trade, you should immediately put the stop loss into the system. your order is filled, you must put a stop loss order into the system. Yeah, small losses are always good losses, guys. You should trade with discipline. Now here comes the ego. See, ego is your greatest enemy, guys, when you come to the trading. Because why ego doesn't allow you to admit that you are wrong. Suppose you went long into some XYZ stock and it started falling. Now what you'll do? Instead of exiting your long and going short, you will keep on holding it till it doesn't start moving up. No, even what people do, people will start averaging. It is coming down, they are averaging, then a 10 rupee down, then again they are adding to it. So this is how a novice trader do. But ego will not make you a successful trader. As soon as you feel you are wrong, you get out of the trade. No, who is stopping you, guys? Ego is stopping you. So be fast to admit that yes, I have taken a wrong trade. Wrong or right is not meaningful in the trading context, but the important thing is admit when you are wrong. Okay, fine, this is the trade that I have taken and it is not working. I felt that today market will go up, but it is not going up, it is coming down, let me short it. Yeah, so ego, remove your ego when you come to your office where you are trading or at home. Now emotions, trade the math, not your emotions. Emotion, what are the two key emotions that come into the trading? They are greed and fear. Everybody must have heard about it. Greed and fear. Now tell me, guys, what happens when market starts coming down? Everybody is fearful, people are cutting their longs, and the more it comes down, the more people become fearful, and that fearful action will lead even steeper fall. So whenever you are coming to the trading, trade your setups, your entry should always be mechanical. It shouldn't be driven by your emotions कि मुझे लग रहा है ये ऊपर जाएगा, that's why I am holding my longs, but market is coming down. So that those emotions doesn't matter here. Who bothers about you, guys? Think about it. Nobody bothers about you or me. How much quantity we are trading with? There are lack of volumes every day being traded into the market. So you will make money by following the direction of money flow, means in the direction where money is flowing. If the money is getting pumped into a script, it is keep on going up, and there you need to be long. And if the money is taken out from a stock, it starts coming off, you need to be go short on that stock. And the last one is capital at risk and risk per trade. Now these two terms come under money management. Capital at risk is under money management, and risk per trade is under risk management. Yes, guys, so you should have a proper risk management and very solid risk management, because market can prove you wrong anytime. You could be wrong for 10 days in a row. Then if you don't have a good risk management, a very well risk management, you will lose a lot. So before coming into the trading, you need to work on your capital management and risk management and your mindset. If they are good, rest all will taken care of. So clear to you, guys? I hope these 10 and very important points are clear to you. If they are not clear, kindly ask me by writing us. Yes? Now let's move on. Now here comes a question, guys. To trade you should know. Suppose I want to trade some stock. For example, I have taken Reliance. Now if I want to trade Reliance, what are the things I need to know? Okay, first question is what to trade. We got the answer, Reliance or some XYZ stock. When to trade? If I want to trade Reliance, as per our example, the second question is when I should enter into Reliance, and how much quantity of Reliance should I trade with. But everybody tells that these are the three questions which are important to know, but even the more important question is when to get out of the Reliance. This one. As a trader, you should plan your exit first. Yes, as a trader, you should plan your exit first, guys. That yes, this is my entry point and this is the point when I'll get out of the trade. So what is in my hand as a trader? Outcome is never in my hand. What people try to do, they try to control the outcome. For example, people generally say yes, I will keep a 10 rupees target or 20 rupees target or 30 rupees target. Yeah, now what is this? This is that you are trying to control the outcome. But I know this is hard to hear, but the outcome is never in your control, guys. What is in your control is your risk management. These are the golden words you need to write down on your trading desk, that my risk is in my control, the outcome is never in my control. It could be 100 rupees also, or it could be 5 rupees also. That market will approve the move, but when I am entering, the risk management is completely in my hand. So these are the 4 questions from now that you should know before entering into the trade, that yes, this is what I am trading, these are the setups, when they will occur I'll enter into the trade, this is the quantity with which I will trade, and this is my exit point. अगर यहाँ तक भी स्क्रिप्ट काम नहीं करती, means I am market is not approving my research or my analysis, right? Let me get out. I will enter again. You can anytime you can re-enter, no? The cost of re-entering is only a brokerage, but the cost of being wrong could be too much, guys. And most of you would have experienced this. Am I right, guys? Okay, fine. Fantastic. Let's move on to the next slide. This is the example. This is a now answer to this question, guys. Let's understand this again. When to get out. बहुत से लोगों की ये टेंडेंसी होती है कि रखे रहो, होल्ड करो, ठीक है, मार्केट आएगा वापस आएगा वापस आएगा. नाउ सी द एग्जाम्पल. Have they ever came back? This is the example of Arcom. कहाँ पर भी यदि आपने होल्ड करके रखा होता तो. Now see the next example, JP Associate. From 340 it has come to 17, even lower. So holding is not a solution to the problem. The solution to the problem is you should know your exit point. When to get out is also what is your exit point. So always before entering into the trade, decide your exit point. Clear to everybody? I want all of you to clarify this point, guys, very very well. Yeah. So see, this is market. There is no guarantee that because it has gone up it will not come down. Anything which can go up can come down. Who can stop it? And this is the monthly chart, guys. See, the months on months it has came down, 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 and now there is no chance for it to go up. Now, is trading a business? Yes, guys. How many of you think that trading is a business, and how many of you think that it is not? But the right answer is that yes, trading is a business. Like any other business, trading is a complete business, a robust business. These are the 5 trading results. These are the 5 outcomes which can happen while you trading, guys. So suppose you have taken a trade. Now 5 things can happen. Either you can make a large profit, first one. Second, you can have a small profit. Third, you can exit your position at the break even. Fourth, or you can have a small loss, or you can have a large loss. Now tell me, guys, anything else can happen other than these 5 results? These are the 5 results of our trading. Yes. Now if you are making a large profit, very good. If you are making a small profit, good. If you are closing your position at the break even, okay, no problem. You have not made anything, you have not lost anything. But what if you are making large loss? Okay, I have taken a small loss. Small losses are good losses. Write it down, all of you guys. Small losses are good losses. There is no harm in taking a small loss, because see, market is changing. You could be wrong. How does it matter being wrong or right? The matter is whether you are making money or not. You are here for the wealth. Remember our second slide? Not for being right or wrong or any kind of ego satisfaction. Yes? So you should not have large loss at any cost. Yes, guys? See, every loss starts small. A small loss turns into a large loss. If this slide you understand clearly, you will understand the whole trading. That much important this slide is, guys. So please pay attention to this slide, everybody. Yes. So if you remove the large losses from your system, let me also remove this. Now what's happening? Small losses are taken care by the small profits, and you have a resulted net large profit, because this is a break even. So this is nil. This is your zero line in trading. This is your -1 and this is your +1. This could be +10 also. So what happens? Small losses are taken care by small profits, and after all you will have a net large profit into your trading account. And that's how the trading works. So remember these words, write it down, guys. Never ever have a large loss. Cut it down. If you are not understanding it, cut it down and get out. No need to stay there. Okay, so I hope this is clear to you. Let's move on, guys. Now we'll discuss about the do's and don'ts of the stock market. So guys, how you are finding the training? So far so good. I hope you all are finding it very useful and very informative. Now we'll discuss about the do's and don'ts of the stock market. What should be discussed first? Yes, guys, all of you. don'ts or do's? In my sense, don'ts should be discussed first, because before getting into any business I should know what are the don'ts of this business. If you know the don'ts, do's will be taken care. So let's discuss the don'ts of the stock market. Let's go on. Yeah, here you go, guys. Now at least twice read this slide. I want everybody to read it. Wherever you are, guys, read it at least 2 times. You will get to know where you are mistaken, and I am very sure that 80% of people who are watching this training will find that they are mistaken in these 4 points. Let's discuss it. This is very interesting. First point is, do not follow advisory services. So called hot tips or profitable tips, you know it better, guys. I don't know much, but I too receive the messages of hot tips or profit making or blockbuster calls or HNI calls, short calls, this, that, blah blah. But understand this, guys, they are selling the tips, then why not they are trading on their own tips? Yes, first thing. Second thing, they are there for selling their tips. They are not concerned with your profit and loss. Am I right? All of you guys, be very honest. Honesty will make you a better trader. And first, you need to be honest to yourself. Now, second point is, don't trade with brokers' advice. Why? Why don't trade? Because broker is giving you a lot of calls so that he can keep you busy in trading, because more you'll trade, more the brokerage they'll get. They survive from the brokerage generated by your trading, and that is why they are giving you tips to trade. So they are for their brokerage purpose. They are not for giving you profit or loss. They are not concerned with your profit and loss. So never ever trade on broker's advice. Do not trade on operator based scripts. Why? Why, guys? You answer, guys. Some of questions you need to answer also. Why? Because operator based scripts are generally low volume scripts, and what happens, there is a rumor into the market of buying that script. Okay, so what happens, they want the retail traders to get into that particular script. Now tell me, guys, if they want you to buy, means they are selling. So there is again a trap against you. Now if you buy, sometimes operator based scripts open a 5%, 10% lower, and you don't have volume to get out. I have seen a lot of operator based scripts, I don't want to mention here, where the people want to exit but they don't have volume to exit it, and every day it is opening 5%, 10% down, and ultimately they have lost a big amount of their hard-earned money. So this is the reality of operator based scripts. Guys, remember my words, if you cannot make money for you, nobody is going to make this for you. You have to work hard in this market and you have to make money for yourself. This is your money and you are responsible for your money. How you can rely on some hot tips? Now the last one, and very popular mistake, do not listen to the rumors business channels and TV analysts. Tell me, guys, how many of you have made money listening to the TV analyst? Honestly, guys, this is an interactive session. Since this is recorded, I cannot have the live answers, but I hope everybody of you must have watched the TV channels. I don't want to take the name here, but we have 3 4 very popular TV channels, business channels. And generally what happens, people do have some favorite analyst, and they are working on their advice, and suddenly they had a big loss and their analyst is on leave. Yeah. So guys, why they are on the TV channels? Because they are getting paid. Yeah, either their company or channel is paying them to be there. It is their job to give the calls on the channel, or sharing their views on the market, but they are not concerned with your profit or loss. Sometimes when they are giving the tips, the market is trading at their target only, or it has taken the stop loss. Entry point was way far from the current price. So you cannot make money listening to the TV channels and TV analysts. So be very clear, guys. These are the 4 massive eye openers. Yes. Now the question comes, how I can make money? Okay, I'm not following anybody or not looking at anything. Now tell me how you can become a successful trader. So the answer to the question is that you can become a very successful trader if you become skilled, or if you get trained. Getting trained means getting your mindset ready for the trading. You have a proper education of the trading, you have a right method, right system, you have a robust risk management, money management, and with a well tested and tried system, a winning system, you are coming into the market, you are working on it, and you are making millions of money. So guys, get trained, be educated, be skilled, and become an independent trader. Don't be dependent on anybody, because they will not make money for you. Mark my words. Yes, let's move on, guys, to the next slide. What are the do's of the stock market? Don'ts we discussed into detail. Now we'll discuss the do's of the stock market. What to do? Okay, fine, you told us what are the don'ts of the stock market. Now tell us what are the do's of the market. So first point is, there are a lot of things, but something is here which we have came up with, guys. These are the main points, and the 10 main points what should be there. Number 1 is, be reactive in the stock market, don't be predictive. And this is the biggest mistake I have found so far, guys. You know, you will meet people telling, okay fine, bank nifty will go to 28,000, or nifty will go to 11,000. So, or some Tata Steel will reach it here, something this will reach there. So these are all predictions. What will give you money be as a trader? Yeah, tell me, guys. You will get money when you trade, and your trade will be based on the reaction, not will be on the basis of prediction. Clear to everybody? Understand it, guys. I am repeating, be reactive means you are reacting on the market's reaction. My job is not to sit here and predict that this will happen, that will happen. I am not an astrologist. I am a trader, and my job is to react on whatever happening into the market. How does it matter you predicted 11,000 or 12,000? If market is coming down, my job as a trader is to short it and get some 100 200 points, whatever I am getting. Clear to everybody? All of you? Now the second point is, wait for the right opportunity to enter. This we have already discussed. Always trade with stop loss. Never ever trade with stop loss, guys. No matter how good you have analyzed it, but market can prove your analysis wrong anytime, because market is made up with the money flow. It is not something that you because you predicted it will go into this direction or that direction. Yeah, so no matter how good you have analyzed it, guys, there is always a the chances of working a trade in your favor or not in your favor is always 50-50. Yeah, so always remember that anytime market can prove you wrong, so do not bet a whole lot in one trade. It can go against you. And trade always with a stop loss. Always decide your exit point. I am again and again emphasizing on stop loss because it is important. Get out fast when market is proving you wrong. This I already discussed, and this is also called as stop loss. This is the point where I'll admit that I am wrong and I'll get out. Don't hesitate in getting out, or never ever hesitate in exiting from the position. Nobody is looking at you, guys. Why to hesitate? Who is watching you? Yeah, whether you are exiting or entering, nobody is watching you. So never ever hesitate to get out of the trade if you are not feeling good or if it is not working in your favor. Buy only the strongest. Buy the strong stock of the strongest sector, and the another point is sell the weakest stock. Select a weakest sector and the weakest stock of the weak sector. That stock you need to sell. Suppose I have taken some sector. Let's see, for example, I have taken the auto sector. Now if the market is down, yeah, auto sector is also down, it is in red, then I'll suppose in auto sector there are 12 stocks, then I will not short the strong stock of that sector. I will not short Maruti, rather I'll short TVS or some other script. These are for example purpose. So don't attempt this mistake, because what will happen, the strong stock will not correct much, and whenever market finds support, it will go up like anything, and even if the sector performs, you will not perform. Yeah, so this is also a very important point, guys. Now this is one of the biggest mistake that people do, and I have discussed in the slides, that never ever average in loss. Always average in profit, never ever average in loss. What happens, suppose people have bought some stock is going up, now somebody has entered here. Yes guys, are you all able to watch it? Now what happens, it went up and then it went sideways and started coming down. Now after coming down, it started moving up, people will add here. Then again it is going down, but again it went sideways. They'll think, okay, the sell off is finished, they'll again add here, and finally it will came off, taking everything. So this is called average in loss. So never do this, guys. Never ever average in loss. What you need to do then, always average in profit. I don't know how many of you do this, but I do this every day, or whenever market gives me a big move. Suppose you have entered here and market is moving in your direction, you again enter here, I mean you add here, then you can also add here, and then let your winners ride as much as they can. So this is called as average in profit. So remember my words, guys, never ever average in loss, always average in profit. Be a buyer when market is going up and be a seller when market is going down. This seems very easy, but this is the difficult thing to do. What happens, people keep on predicting that okay, it went up so much, now it has to come down. Now your prediction will not bring it down. Do you have that much capital to bring it down? If not, then you'll have to be in the trend, and that will give you money only. And the last point is trade with discipline and confidence by applying risk management and money management. The beauty of risk and money management is, guys, that you become out of fear. Out of fear. You don't have fear. You are not fearful when you are applying your risk management and money management, because you know this is my maximum drawdown that I can have. But if it start working in my favor, I'll make a lot of money. So this is the way to overcome your fear, by applying the risk management and money management. Now, what are the mistakes? We have already discussed a lot of mistakes in the previous slides. Yes, guys. Let's understand the last topic. What are the top 8 mistakes of the trader? Now, there are a lot of mistakes, but these are the 8 bigger mistakes which if people can avoid, they can become very successful in their trading. Now, how many of you have experienced the first point, guys? Tell me honestly. Yeah? Yes, guys. So what people do, people trade first, they had a loss or some bad experiences, and then they come to the some training or some workshop, and then they try to educate themselves. But the ideal condition is you educate yourself first, you first get trained, you first get skilled, then you start trading. Because, guys, understand, trading is like a sport. It is an international match, like cricket, for example. India is playing against Australia, two strong teams. So this is how trading is. You are here, and there are a lot of good players which are against you. You might be thinking of buying, and somebody is selling at the same time. So education is first, training is first, skills first, then you start trading by applying those skills, and then you will be successful. Quick to take profits and slow to take losses. How many of you do this, guys? I know a lot of people do this. Whenever they are making money, they take it quick, and whenever there are losses, they keep on holding, adding, and this, that, which ultimately causes a large loss. Yeah. So what should be the ideal condition? When you are in profit, you need to make it large, and the largest is made by the biggest, by averaging onto the position in profit. You can make it the biggest. Yes. And those some trades will be your best trades of the year, when you have made the money which you can make in 2 months of trading. So that kind of large also you need to make while trading. Remember it. A lot of people are trading into margin and with big quantity. That is also not the way to trade it. Okay, quality, you need to trade quality stocks. Now this is important, guys. They have no trading style. What happens generally? Today they are trading intraday, tomorrow they'll take a swing trade, and day after they'll start investing. So this is now not how trading is done. You need to fix your trading style which suits you. For example, I'm an intraday trader. Holding doesn't suit me. My nature is not to hold for a month or two. Even I'm not comfortable with a 4-5 days holding. So your trading style should match you. It should suit you. Maybe other people are comfortable with holding, they are not comfortable with intraday trades. That is also good. This is how they trade. So there is no problem, but the problem is that you should have the clarity of your trading style. And how it comes? While you practice all type of trading, you are taking intraday also, swing also, then you'll get to know, okay, this doesn't suit me, this suits me, and this is the way I'll go with. Okay guys, ego and greed, never ever be egoistic in the market, because your ego will not be satisfied here. Very straightforward guys. Don't be greedy. Even if you are watching that market is turning from somewhere, you kept on holding because you want make a 50,000 to 1 lakh. That is something called as greed into the market. Okay, if the market is turning, you need to book your profits no matter how much it is and get out. Hot stock tips, avoid it. Now let's move on to the next slide. So I hope guys these are the massive eye openers and you all are finding it very informative, very useful. Even if you don't understand something, watch this video 2, 3, 4 times and understand every point. This is how you'll become a successful trader. Now, what makes money into the market? A big question, and maybe this question will be there in the mind of all the viewers watching this video. So, what makes money into the market? And let me reveal the secret. Here is the secret guys. Make more when you are right and lose less when you are wrong. Always remember, whenever you are right, like I said in the last slide, make your largest from the biggest. Yes, so whenever you are right or market is proving you right, let your winners ride and make them the largest by averaging in the profit. And whenever you are losing or market is not proving you right, cut it and exit or reverse it. Fine. So this is the secret guys. Read it out 2 times at least. Make more when you are right and lose less when you are wrong. Now let's move to the next slide. The best piece of trading advice. So guys, this is the last topic of today's training, that what are the best pieces of trading advice. So here are the best advice. Now the first is always use stop losses. If you are not using it, use it. Start it from tomorrow, and as soon as your order is executed or order is filled, put the stop loss into the system. I don't want anybody to bring a mental stop loss or some random stop loss. There are the methods to bring the stop loss into the system and you should follow it. Okay, so all of you guys promise me that you will always use a stop loss. Now the next is, don't trade with the funds you can afford to lose. Never ever trade with the lended money. Never trade with the money which is required for your lifestyle expenses. So always trade the money which you are comfortable to lose, because there could be bad days also, so you need to survive those days. And unless you are trading for 6 months or a year, you will not have sufficient money, surplus money. So always do not put the money which is needed for your lifestyle maintenance to the trading. Yes guys, clear to everyone? Now the next point is, don't be obsessed by the indicators. See guys, the fascination of indicators are to the novices only. Let me tell this very clearly to all of you, because the professional traders don't use so much indicators. They use very less indicators, but the way they trade, or the way we teach our students to trade, is the way of professional traders. How they trade, we teach the students to trade, and we use the same strategy in our trading. Yes, so indicators doesn't make money, you make money, and you need to be skilled. Maybe some indicator, if you are experienced, many of you would have faced the case that some indicator is showing oversold or overbought, and then also it is going down and going up. So don't ever be obsessed by the indicator until unless the price action is proving it right or wrong. How can you predict? Again, the prediction comes here. Be reactive is the key to the market. The moment you'll stop predicting the market and start reacting to the market, you will start making money. That is my guarantee. Got it, guys? Now the fourth point is decide what kind of trader you wish to be. Here comes the trading style that we have discussed. Choose your trading style. If intraday suits you, guys, be an intraday trader. If it doesn't suit you, you are working or you are in some other business, choose your swing trading style. Okay, I'll enter today and I'll carry it for 3-4 days or 5 days for 10 days. Yeah, or if you are not comfortable with the swing trading, also become an investor. So you should be clear with okay, this is how I'll remain in the market. This doesn't suit me. Otherwise, what will happen? If the position is in loss, you will become a swing trader. Yes, guys, it happens, or it might have happened. So that is not how it works. Now you have the pointers, guys. This is a very good presentation and one of the best training. So you need to understand every point and watch it 3, 4, 5 times. In one time you will not understand everything. Yeah. And the last thing is, a good trader knows that the best trade works almost right away and never takes a big loss. If it doesn't feel good, get out. Who can stop it? I already explained this point in the previous slides. If market is not proving you right, get out, guys. There is no room to hide if it start going against you. Got it? Okay, so guys, this these 5 pieces were the best advice, and here you go with the YTG's online courses, and I have shown you that we provide the online training courses, and in our online courses you will learn the intraday and swing trading of stocks, indices, and we have 2 separate courses called Stocks Masterclass. Let me open that slide. Yes, here you go. So these are the three programs that we provide, guys: Index Masterclass, Stocks Masterclass, and Peak Performance Mindset. So we have designed this Index Masterclass program especially for the people who want to become an index trader. Some people are there who only want to trade Nifty and Bank Nifty. This course is for them. And Stocks Masterclass is for people who want to trade stocks. Some people don't want to trade Nifty and Bank Nifty for whatever reason. This is the solution to them. And the people who are finding some psychology problem, that fear or greed or something that after knowing everything they are not able to perform into the trading, here is the solution of the mindset program, where you will be taught everything about the trading psychology. And guys, the charges are very nominal of our trainings, because we want more and more people to take benefit from the courses. And as soon as you pay for the courses, your course starts. okay, because when you pay you will get the immediate access. And after that we conduct our live training in every 15 days, so you can come there and join us live, and will revise your course, so that you can revise your course, and you can alter it, you can ask your doubts, your problems, okay. And the beauty is that, guys, these courses are for the lifetime. You pay once and then we are there for the lifetime, because trading is something is not something which will finish in 1 or 2 days. It's a process which will take time to create you as a trader. Yes, so guys, these are the courses. I hope more and more people will come and join our program. Now let's get back to the previous slides, then I'll explain everything. What are the course content? So here is the content, guys, that we teach in the training. First we go with the psychology, then the money management and risk management. Because if you know these two, if you understand these 2 chapters, guys, half of the trading is done. Now method comes in the later half, but if you do these 2 things, half the trading is done. Then the system will teach the trading systems for the entry, floor pivots, magic of averages, all star entries, intraday and swing trading, investment, and the 10th chapter is get set and go. After completion of the 9 chapters, you start your trading. So after completion of the our online course, you will be able to trade Nifty, Bank Nifty and stocks. You will be very well equipped to trade all these 3 asset classes. All 3 these scripts or segments. Yes, guys. Now this is a very important picture. Now tell me how many of you can understand this. This is called swim along the whale. If you can see, guys, this is a whale, a big fish, and these are the small fishes which are swimming along the whale, and these are the fishes we are coming against the whale. Now what happens, that big fish eats small fishes, and the all the fishes which are swimming along the whale or big fish are safe. So this is how stock market works. If your money is flowing in the direction where where is the money of big players, big pockets, or so-called HNIs, FIIs, DIIs, then you will make money. If the money is flowing in the direction in this direction and you are on the other direction, chances are you will be trapped or you will be punished. Your money will be eaten out. So always try to swim along the whale. Yes, guys. Now this is the 5-step process how we create the successful traders. First we give the trainings to our students, then we talk to them personally about their investment and their trading styles and encourage them to make a trading plan. We take some separate sessions on the trading plan. Then we provide the mentoring, active mentoring, weekly setups. Every weekend we meet to share the weekly setups and review sessions, doubt solving sessions, so that they can review and they can become skilled week on week basis. They are improved every week. So this is the process how a trader is created. See, you might have heard the quote, the champions are not born, they are created. So this is how the successful traders are created. Now why you need training? This is a good picture. because guys, this is an international sport where you need to get trained very very well, and you need a right coach, a right guide. And this is why we are here, your trading guide, which will guide you through this trading jungle, will shape you, will create you as a trader, will help you to find the kind of trader you are, will sharpen your skills, and finally we will help you to become an extremely successful trader. So guys, here are our contact details. You can email us at ytg2go@gmail.com. You can call us on this mobile number, and you can go to our website and can join and start our course anytime. And these are the courses that we provide. These are the very nominal charges. We kept the charges low so that everybody can join us. Okay, so guys, a big thank you to all of you for watching our training, and I welcome your questions. You can email us, you can write us and call us, and I hope you will start your course soon. You will take the first step to become a very successful trader for yourself, your family, for your life. And wish you all success, wish you all very very best. Thank you so much guys. Bye bye, take care.